Hello and welcome to a CMS Forex Fundamental Short Look. Today is Monday, June 7th around 11 a.m. and we're going to be looking at today's German factory orders data. Orders in the month of April were up 2.8%, a much better than expected release, as forecasts had called for a 0.1% decline. The 2.8% rise follows a 5.1% increase in March. Taking a look at the chart to the right, we can see that 3 out of the last 4 months have been rather strong for the German export sector, and it's really important because Germany is the #1 economy within the Eurozone, and exports make up about 1/3 of all of its GDP. The news would indicate that the weaker euro is helping to make German exports more competitive abroad, and that is helping to boost some of these factory orders. The highlights from the release include domestic orders rising 2.9%, so that's within Germany, which was slower than the pace we had seen in March, which was at 5.6. External orders were up 2.8%, also down from the March levels. Exports among Eurozone members was down 1%. While non-Eurozone orders rose by 5.5%, which was higher than we had seen the previous month. So this shows us a pretty clear picture that Eurozone members are cutting back their spending as indicative of the 1% decrease, while domestic demand is also slowing somewhat, while non-Eurozone orders are on the rise. Therefore, the export sector is expected to drive the economy in Germany, as the consumer-led recovery looks unlikely in the near future. Taking a look at the euro-dollar pair, we see that in Sunday trading we had dropped to a fresh 4-year low at 1.1875, but then we began to recover, even climbing a little bit higher than our close on Friday after we had the positive German factory orders. However, since then, after touching a high of 1.1990, the euro has been declining once again. Stocks in Europe, which had started the day down rather sharply, did manage to pair some of their initial losses, but then dipped once again following the New York Open, in which US stocks, after opening higher, slid down into the negative territory in early New York trading. So we can see that pressure manifesting itself as the dollar gains against the euro in the early New York session. Now, over the coming back from the weekend, Hungarian officials did spend most of the weekend and Monday trying to undo the damage caused by remarks late last week warning that Hungary was on the verge of following Greece into a debt market implosion. The new government will soon issue a new action plan on the budget, which will include spending cuts and revenue increases, as well as cuts to its bureaucracy. So the tensions in credit markets eased somewhat following those statements, with the cost of insuring Hungarian government debt against default giving back some of last week's rise. So that could help to calm some of the market jitters we had experienced on Thursday and Friday as a result of the Hungarian news, though by all accounts they're not out of the woodwork just yet. Look at the euro-yen. We saw similar price action to the euro-dollar, and where we fell to open the week, as we had some follow-through to the sharp decline on Friday's session. We hit a low at 108.05, but then we did retrace a small portion of the down move, about 38.2%, and then we started declining again in the US session. Now we did break below a rather important line of support overnight at the 109 level. So we'll see if that indicates further losses for the pair if we close below this level in today's trading. Not too much on the calendar in terms of US releases coming up, so look for tomorrow. We do get German trade balance as our next important Eurozone release. So till then, this was a fundamental short look.